The first tip I will give is to understand your financing and the variables that impact you. Assuming that you're not paying all cash, the first thing you'll need to do is to talk to a lender about getting pre-approved for a mortgage. This will help you know what price range that you should actually be looking in, because even if you know that you could afford a certain amount, there is a difference between the number that you know in your heart that you could afford and the number that a bank is actually willing to bet that you can afford over the course of the next 15 to 30 years. And unfortunately, that second number is the only one that really matters. Now, once you get that number, know that there are many variables which could impact your actual monthly payments, such as HOA fees, which we'll get into in more detail next, taxes, and insurance, among other potential things like maintenance costs. If you're using an FHA or a VA loan to finance your condo, make sure the building you're buying in is on the list of approved buildings for those programs. If it isn't, you can apply to get it on there and can usually still move forward with the deal, but there will be a couple more hoops that you'll need to jump through first, and it might just take a little longer to close. As long as you're working with an experienced lender and all parties are on the same page, this shouldn't be more than a minor inconvenience.